please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
But let's move on. One stock on our radar right now is Maruti Suzuki. RC Bhargava, the chairman of the company, joins us now to talk about some larger issues. Mr. Bhargava, good morning. I wanted to start by asking you about this big transport revolution that India will see after the Bharat Stage 6 norms get applicable. You're working towards a portfolio of hybrid and electric vehicles. What kind of Capex do you envisage for your launch in 2020? And do we have any of the infrastructure in place yet?
No, we haven't got the infrastructure. As you know, the charging infrastructure in the country is still very, very inadequate. Nobody's really got any major program going to build infrastructure. And as far as the budget for launching electric cars is concerned, that budget has not been made yet, because at the moment we only have a budget for 18-19. We don't even have a budget for 19-20, let alone 2021. So I'm afraid there is no budget or Capex or anything planned for that. The research work and the development work for electric cars is going on in Japan. So I assume that Suzuki and Toyota, between them, have some budget there, but there is no budget for it here as such.
Okay, so still a lot of work to be done. You know, given the high import content, the lack of scale so far, and the high battery costs, as we have discussed in the past, do you think the cost of electric vehicles will be much more than the cost of internal combustion engines? And by how much? Is Maruti sufficiently, or rather, will Maruti address this through, the JVs? I mean, you guys have signed up with Toshiba, Denso, Suzuki. Will you be able to localize, bring down costs, etc.?
See, the major factor which raises the cost of electric cars is the battery. And over the last 6-7 years, battery costs have been coming down. The Government of India's policy towards electric cars, I think, has one major assumption in it, which is that this trend in the reduction of battery prices will continue over the next few years, and battery costs will halve to what they have been. Roughly, today battery costs, I think, about $200 per kilowatt hour. I think that will halve is the expectation. Many consultants have given that expectation also. Whether it's going to happen or not, only time will tell, because there is another school of thought who have done their own studies, who believe that this trend in the reduction of battery costs will not continue, and that battery cost prices will not come down. As far as we are concerned, we have to buy batteries from a vendor. So we are very much dependent on what trend technology has in relation to batteries and what impact it will have on prices. Because at today's prices, the problem we face is that the compact cars, which means cars which are below 5 lakhs in price, below 4 meters in length, those cars will more than double in their price to the customer. And that price is unlikely to be acceptable except to a very small number of customers.
Well, that would not go down well, sir, right? I mean, compact car prices doubling once they are, in their electronic form. I don't know how that will work. So how is the company looking at perhaps bridging this gap? I mean, how would you prepare for the cost escalation, and what should the consumer expect?
See, our getting prepared for it doesn't help, because ultimately the customer has to pay the money for the car. And if the customer doesn't pay for the car at that high price, our being prepared doesn't help.
Okay, Mr. Bhargava, moving on to some other matters, there's still not too much of clarity on the alliance that you have with the Toyota, the Suzuki-Toyota alliance. So can you give us some more color on the nature of this partnership and what we should perhaps expect in terms of tie-ups this year itself?
No, I don't think beyond what was stated in the press note there's any further information or material in this matter.
Okay, I also wanted to ask you about the rupee depreciation. It's depreciated quite a bit against the yen, and it is a big risk for your earnings. I mean, 16% of your costs as a percentage of sales are in yen. Can you tell us how much could this impact you in the quarters to come?
Yes, the depreciation of the rupee does add to costs. And while some part of it is hedged because we have an export income also, and exports earn more, but overall the depreciation of the rupee, especially against the yen, does have an adverse impact on our margins and profits. Exactly how much, I'm not able to predict because that depends on what the whole trend is. We've done a certain amount of hedging of the currencies, of commodities. So overall, let's see what it comes out to. But in principle, yes, it's a negative factor.
Okay, so let's talk about the here and the now then. What about demand trends? Do you see positive demand trends continue for the rest of 2018 because of monsoon, etc.? And are you seeing more activity now in the urban markets versus the rural?
The demand for cars is very strong, especially for a few models. And you've seen that impact in the sale of cars in the first 2 months of the year. That demand strength, I think, is going to sustain during the rest of this year because a good monsoon will further help in increasing demand in the rural areas. It'll also increase demand in urban areas because the economy, I think, will do better on the back of a good monsoon. So these factors will be very positive. The price of petrol and diesel, it had gone up a lot in the last 2-3 weeks. It has been coming down. Nobody knows what's going to happen in the rest of the year. And customers, more than anybody else, are very worried on what it will cost them to run a car. But it doesn't affect the demand of cars in a very major manner.
In that case, sir, what would your outlook be, sales outlook for the current year, 2019? And also an update on the production capacity. You were, I believe, looking to expedite the second phase of expansion at Gujarat. What is happening on that front?
This year we'll grow by 10% because Gujarat will give us additional cars. The second plant will be running, first plant will be running at full capacity. The second plant will get commissioned in the beginning of 2019, and Suzuki is working on the third plant, the C line, and that is expected in the beginning of 2020. So these additional capacities will be added on to our production capacities in Haryana. Plus, the arrangement with Toyota will give us some extra cars because Toyota's unutilized capacity will become available for producing cars for Maruti.
Okay, so 10% at least for Maruti this year. What about the industry as a whole in FY19, sir? I mean, overall, are you expecting a positive number? Because some companies have been struggling and we've even seen degrowth in certain cases.
No, industry in May has done quite well. There was a significant growth of industry in May. I think the figure was around 12 or 14% or something like that. This year has not been so bad. But overall, it's true that the growth of Maruti has been faster than the growth of the rest of the industry. But I think that's a phenomena which nobody can predict. It depends very much on what kind of models different companies come out with, how those models are accepted by the buying public, and those have an impact on how rapidly your sales grow or they don't grow. So predicting the sale of different companies over the rest of the year is something which is very, very difficult to do.
Okay, Mr. Bhargava, always a pleasure speaking with you for your candid thoughts. That's the word coming from Maruti. More importantly, they say that this whole electric vehicle story has a lot of time to play out, huge capex for this transition to take place. We will take a short break on that note. The latest commodity trades line.
Welcome back, and it continues to be a very, very volatile trade in the crude oil prices. We did see percentage point of gains overnight, but 0.5% down is how the Asian markets have begun. This is ahead of the OPEC meeting in Vienna and also escalating tensions between China and US. While on one side, you have Goldman Sachs reiterating that we will see $82 per barrel of crude in this summer itself, but you have EIA reports also suggesting that the increase in US production is constant, and the next month actually could add nearly 141,000 barrels per day yet again, and that's keeping some pressure on the prices. As I said, very, very volatile, but today Asia has begun on a weaker note. The gold and silver prices have seen some strength come back. We did see gold prices come off its 5.5-month lows, 0.25% up on both of those counters right now. This has to do with the sell-off in the global equity markets, the escalating tensions, again, because of the trade war. And the markets also are looking at the German squabble about immigrants. So some premium being added to the prices because of that as well. The base metal prices, well, that is where you have seen a third straight day of decline come in. The copper price is holding around those 2-week lows. Aluminum is at a 2-month lows. You have seen a very sharp decline in the Shanghai metal prices. So whether it is steel, iron ore or coking coal, all of that has declined between 2 to 4%. And that seems to be adding pressure onto other metals as well. The only thing that was actually holding a bit in the green was the nickel prices. But everything else, as I said, has been trading in the negative on your screen. So yet again, another day when you have seen a bit of a weaker opening coming in for the commodity space.
Okay, thanks a lot for that. Let's do one thing. Let's take a quick break. But up next, we'll get chatting with one of the big pharma players, S. Ramesh, the Executive Director and CFO of Lupin, will be joining us.
In fact, the one sector that's been in the limelight is pharma. We're talking big gains for most stocks. And today we're putting the spotlight on one such large pharmaceutical company. The stock is up almost 20% this month. It's recovered almost 26% from the lows, the 52-week lows. The question is, what next? The company I'm talking about is Lupin. And we have with us Mr. Ramesh Swaminathan, ED and CFO of the company. Ramesh, good morning. Always a pleasure talking to you. Thanks so much for joining in. Now, you know, one facet from our past conversation stands out for me. You've always said that this is a consolidation patch, and it's really, you know, 2022 when the fruits of revival will be seen for Lupin. Now, I'm trying to figure out if those timelines by some chance could be getting condensed, could contract, because things seem to be reviving. I mean, the US FDA seems to be responding a lot more quickly to some of your peers. How is it for Lupin with respect to some of your key plans now?
Yeah, I think that's a good thing to talk about. There are a lot of green shoots that are visible at this stage. You know, it's still a turbulent time. I do believe that prices would erode, but perhaps certainly not to the extent that it did in the past. It would still be perhaps in the single high-digit number. It will not be double-digit in our opinion. And if we speak about Lupin, of course, we are suffering from the loss of exclusivity of a couple of molecules in the recent past. But we do believe that there would be at least about 2 or 3 good molecules coming up towards the second half of the current year, which would include levothyroxine, it would include minocycline, and potentially Renexa as well. Going forward, of course, we are placing a lot of store on the inhalations portfolio. As you would be aware, next year we would be potentially looking at ProAir. We've also filed for Spiriva. We are first to file on that as well. So inhalations portfolio would start looking in from the next year, next fiscal onwards. We speak about other good developments on our front. We have Solosec that we have launched towards the end of last month, and we do believe that it would ramp up over time. That's a good molecule to be, good space to be in. We look at, in fact, you know, Europe and Japan. We've also made a foray into, in fact, our first biosimilar. We filed for etanercept both in Japan as well as in Europe, and you know, we would see some action there in the coming quarters. Speaking about Europe, we also are getting into specialty there with mexiletine. You'd be potentially making a filing towards the course of this year and potentially launching about a year later. So there are a lot of green shoots that are visible for the medium term, and that's what we are optimistic about.
Okay, Ramesh, hi, good morning. That's good to hear. I want to talk a little bit in detail about the biosimilars business. But before that, just coming to the point that my colleague was making, could we expect a faster resolution or lifting of the warning letters from your Pithampur and Goa plants purely because we've seen it happening with some other companies as well? There's
good reason why it should not. It should happen, you know, towards the end of this year for sure. So we have made our, our action plan. We have been working with top-notch consultants for this. We have been making our submissions, our updates to, in fact, the authorities. The final update would go by the end of this, month. Then after that, we need to wait. But we are pretty optimistic that we could see a resolution of this by the end of this fiscal.
Okay. I just want to talk about some of the key molecules. Ramesh, you mentioned SolarSec. That's pretty big. I mean, my understanding is that I think the estimate is that you could do about $100 million in sales from this molecule. Are these estimates well placed? And what is the kind of contribution you're envisaging?
I think $100 million would be actually on the lower side. In our opinion, we could do anywhere between $200 to $300 million. Though, of course, when you speak to, in fact, the specialists, they do believe that it could actually go up even above that. But that's going to be one molecule, and certainly it is going to be an anchoring product in the specialty, in the women's portfolio for some time to come. But you're looking at a host of other molecules to work on, over the next several quarters. It is going to be M&A on that front in order to expand the portfolio there. But we're pretty optimistic about SolarSec in a general sense.
Okay, coming back, to, of course, talking a little more about the biosimilars business, you spoke about the recent foray into Europe and in Japan. Wanted to understand what kind of growth do you see from biosimilars over the next 2 to 3 years? And also, what are the plans for biosimilars in the US?
Our first foray into this area is obviously etanercept. As you must be conscious of, we already have a joint venture for this in Japan, which helped in development of this product. We had done this over a 500-man clinical trial across several countries. The submission to the Japanese authorities happened on 30th of March, and then soon thereafter it goes to Europe as well. We have already signed up for promotion and distribution of this molecule with Nichi-Iko in Japan. We also have this going to be also going to be launched by Yoshindo itself. So in the case of etanercept for the Japanese market, we do it's a $400 million molecule. But we talk about Europe and Japan together, it's about $4 billion. Overall, etanercept sells about $11 billion across the globe. We do expect being amongst the early entrants in these markets, and we do, for that reason, believe that our market share would be pretty good. But besides that, we're working on a host of other molecules as well. I can't talk about it at this stage, but we do believe that our overall biosimilars business is set to blossom in the days to come.
Okay, that's good to hear. I think you mentioned that the price erosion across the board has reduced to single digits versus double digits earlier. Can you just flesh that point a little more for the industry? Or can we say that the worst is over as far as price erosion is concerned for the industry?
I and a lot of other players in the industry do believe that the worst is indeed over. We speak about, in fact, the peer group, the bigger companies like Mylan and Sandoz, or for that Teva, are cutting down on certain parts of their portfolio and concentrating on what they think would be more value-adding, more contributing ones. But that gives us an opportunity because this paradigm of low-cost manufacturing in India certainly is still alive. We would certainly benefit from that. We're also looking at realignment of certain parts of our portfolio. But for sure, I think that the worst is behind us. But whilst I say this, generics is going to be, it would be important, but I think our concentration in the future would be on more complex generics, as well as on, in fact, the specialty piece that we'll be developing.
Okay, Ramesh, just very quickly, I only have 10 seconds left with me on the show. What you're saying is sounding very good. Just an update on Gavis, where there was an impairment. I mean, should we expect any more, or was that a one-quarter phenomenon?
That is a one-quarter phenomenon. We don't believe that there is any more impairment necessary for Gavis. I do believe that there is a lot of upsides that are possible on Gavis that have not been captured because we erred on the side of conservatism when we actually took this large impairment last quarter.
Okay, all right, Ramesh, we'll leave it on that note. Then thank you very much for joining us and shedding light on some of those important facets for Lupin. So, Sonia, it does seem that better times ahead if you go by management commentary, another pharma company that's sounding optimistic.
Oh, absolutely. With that, it's curtains down on Bazaar. Thanks so much for watching. Lots of trading ideas lined up next on Chartbusters.